Morning, everyone, and thank you for taking the time to come and hear about local housing authority budgets. This presentation is specifically for state-aided properties, so state-aided operating budgets that are tied to the public housing units that are funded by DHCD. So it does not have anything to do with the U.S. Department of Housing and Urban Development. As Sarah said, I'm Chris DeVore. I'm happy to see everyone. I am the director in the Bureau of Housing Management at DHCD. So the agenda for today, which is the next slide. What we're going to talk about is what is the Board of Commissioners' role, not only for budgets, but financial responsibility, the internal controls at the Housing Authority, budget process, the tools that are available to you, the laws, regulations, guidelines that affect what is done at the Housing Authority, and then financial documents. Everyone knows that board members really cannot operate as individual people, as individual board members. When representing the Housing Authority, you are part of a board, a 5-member board, or at least a quorum of 3. So then we'll talk about what is a budget, how much the LHA can spend. We'll talk about the beginning of the process of the budget, what has to happen to start the process, and then I'll do a presentation of the budget, what the budget approval entails, and then questions and answers at the end. Okay, so let's first look at what the board's role and responsibilities are. Next slide. So the board has a fiduciary responsibility to make sure that the Housing Authority adheres to state statutes, the DHCD rules and regulations, and LHA's policies provide regarding the safeguarding of the assets of the Housing Authority. And then the board also sets policy to ensure internal controls are in place that ensure segregation or division of duties and responsibilities, and that there is also segregation between record keeping and approvals. I know that this is a challenge for small housing authorities because sometimes there's only 1 or 2 people at the Housing Authority. However, there are some controls that can be put in place, such as making sure that no individual is completely responsible for initiating a product order, approving the payment and signing the check. So if one person does have the authority to approve an order and to approve the invoice, then another authorized person should sign the check. So we typically see that the checks are signed by 2 people, either 2 board members, a board member and the executive director. But you want to make sure that those controls are exist at the Housing Authority. And then anytime that a check is being signed, there should be supporting documentation that shows what, there should be an invoice, what the check was for. And then the documents should be marked paid so that there's no room for error that maybe that invoice would get paid twice, okay? So the board works with the executive director, the financial staff, and the fee account, or the fee accountant, and the local tenant organization to develop annual budgets and budget revisions as needed. Honestly, generally the work is done, it gets presented to the board. Some boards ask for involvement up front, some wait to see what the proposed budget is and then see a budget again. So it's what works at your housing authority. And then the board approves and monitors the annual budget. Next slide. All right, what tools help guide the board in this role? So there's Mass General Laws, the 121B, which is the legislation, the laws that set the parameters of the Housing Authority. 121B is very extensive. It is something that everyone should have the ability to go in and look at. If the Housing Authority doesn't have the book, or you don't want to go to the library, it is online. You can find it under mass.gov. The contract for financial assistance is the contract that is entered into between DHCD, which is referred to as here as the CFA, between DHCD and the Housing Authority. This contract sets out what the responsibilities are of operating the Housing Authority. And it also is the financial contract that provides for how they're originally done when the buildings were built or when they were rehabbed, and then they get renewed as you get capital money. So that's an important document for you to know about. 760 CMR 4 is a regulation that is the administrative regulation, and that really talks about it's kind of soup to nuts. It talks about conflict of interest. It talks about how the Housing Authority advertises for positions, and it is a document that you also should have and that you should be aware of. And then there are the budget guidelines, which gets issued annually from DHCD. And there is board member training, which everybody is required to take. And if you're a new board member, please speak to your executive director about signing up to take that. Next slide. So how do you obtain the financial information? You get it from your executive director, who could get it from the financial staff. You could ask financial staff to come to a board meeting with the executive director. And you also get information from the fee accountant. Your contact, though, should be through the executive director first, asking for information. And then you always can ask for the executive director to bring someone else with them to talk to you. Again, talk to you as a board, okay? Unless the board votes that there's one designated person that's going to bring information back, but you need to act as a full board. Next slide. So these are the types of financial documents that you would typically see. So the year starts off with a budget, and then you would probably, some boards ask for it, some don't, to see the monthly budget to actual. So this would show you what was budgeted and what in each of the accounts, what is actually being spent. You should see this on a quarterly, absolutely see this on a quarterly and a yearly basis. And again, it just shows how the Housing Authority is progressing with all of its accounts, where there's underspending, where there's overspending, where you're right on target. And if you need to adjust throughout the year, or if something's happening that's causing you to go over, or being under isn't necessarily a problem, but it could be a problem if something isn't being addressed. So those are the things that you would look at when you're looking at those financial statements, the actuals and the operating statements. If you're a housing authority that receives subsidy, you do have to, the Housing Authority signs a subsidy agreement. It's a 5-year document, which basically says that if you are not taking in enough income, that DHCD will provide subsidy to the Housing Authority. And it sets out the rules around the spending of the money. You also should see audit reports. If you have federal units, you're seeing a single audit done every year, I believe. And what the state has done, what DHCD has done, is we've put in an AUP. So an independent auditor comes out once a year, 8 months after your fiscal year end, and they review the practices of the Housing Authority. They look at things, they look at some financial, they look at rent calculations, they look at payroll. So you should also be seeing that when that report is done and issued. It should be being brought to you by the executive director. Also, for people that have any kind of work that's going on, you're seeing RFPs and bid documents. And then the board has the final award of any of those contracts, unless you have somehow designated something to your procurement officer, which is in a smaller housing authority, it's generally the executive director. And at a larger housing authority, it could be the director of MOD, it could be the executive director. but there needs to be somebody on staff that is designated as a procurement officer. Okay, next slide. So what is a budget? What do we start with? And let's talk about that for a while. So a budget's a financial plan that forecasts the income and spending for the housing authority's fiscal year. It's an estimate based on prior year, current needs, and how to best operate within the allowable non-utility expense level. And we'll talk about that non-utility expense level in detail in a few moments. What does the housing authority have to follow for the financial records and preparation? There is a system called the Government Accounting and Auditing Rules, which your fee accountant and your housing authority executive director are well aware of. And that is the process or procedures that have to be followed in submitting your budgets. You have to follow the DHCD annual budget guidelines. And you can find any of our public housing notices or and then the budget guidelines at these links. So Sarah, can you click on the PHA website, the PHN website?
Oops, yes, just a second. I think it should be.
Oh, those are the guidelines. Okay, there you go. So
Yeah.
This page, when you go to this has all the public housing notices, which are rules, guidelines, regulations that we issue that the executive director and the executive director's staff has been given guidance on, or direction even. But it's here. It's open to the public. It's open to board members, certainly. I'm sure you hear about this at board meetings, that we've issued something and, there's, we're making people to do something that else on top of what they're already doing. But it's all here, and it goes back to, it becomes very scant, but it goes back to 2002. And it's the most current years are on the front page, and then off to the side there are links where you can go to the old. You can see related here. It says public housing admin notices from 2002 to 2010. So you just click there, and that would take you back to previous PHNs that are in existence. So one of the things you would see is that you'd see that the budget guidelines are issued every year, and you could go back and you could see what the differences have been over the years if you were so inclined. Okay, so going back to the PowerPoint, the next link is actually the budget guidelines. And so if we could pull those up. Okay, and Sarah, if you could just scroll down a little bit. So the first part is just what's new this year. What are the increases that are being given to the non-utility expense level, which again, we'll get to in a few minutes. What are the caps on the admin salary line? If there's any new exemptions, what are the new exemptions? And the exemptions are outside of the amount of money that is allowed through that allowable non-utility expense line. This year, we gave $45 per unit as an exemption for purchase and installation of stovetop stoppers, and this is to prevent fires on the stovetop in the kitchen. And we are continuing to give $75 for each unit that has a heat pump to support the maintenance of those air source heat pumps. And then we have some buildings that, or some units that are in condos, and we are covering those condo fees as an exemption outside of the bottom line approval of the budget. So I just want to show them, Sarah, if you just, and then we won't have to pull it up later. If you can scroll down into the body of this.
Yeah.
So this is actually the introduction of everything. Where I want to go, can you scroll down a little bit more? These are the highlights, but if we flip through all the way, I don't know, it goes down probably about 10 pages. You'll see that the definition of each account is contained within this document. It generally doesn't change from year to year. But one of the questions that we get all the time are, well, what kind of costs are supposed to be in this account or in this line item? I think you need to go down further even. It really gets to be,
So we're looking
oh,
for,
you're already through. Wait a minute, why isn't it? Sorry, it is in here. It explains what the accounts are. Why is it not here?
did I skip it? Did I go too far? The housing. Is there a keyword I could search for?
What do I want to search for? How about travel?
I'm not finding the search. Oh, I could do it this way. There's one.
Oh,
Like this?
there you go. Okay, so this is an account that's within the budget. That each account has a number on it, and when I show you the actual budget page, you'll see this. And this just explains what the parameters are for the travel and related expenses that the money that goes into or gets budgeted in that line item. And this is done for all the accounts that are within the budget. And it's here. There's also an accounting manual, which your housing authority probably has on. All right, so here's the contractual accounting services, your audit cost. So he explains all of what the line items should contain. It gives you a description. Okay, so this is a document that I know that some of this information is very dense. It's if you don't work with it every day, it doesn't necessarily make sense to you or how things interrelate. But you should be able to get answers from your executive director, financial staff, and the fee accountant if you know, if there's something that you're questioning. Okay, so we can go back to the PowerPoint presentation. Okay, so there is a budget for each program, for each state aided program. So a consolidated budget, which is called the 400-1 budget. This budget consolidates the public housing program. So if you have a chapter 200 veterans development, chapter 705, which is family housing, and you have chapter 667, which is elderly handicapped housing. Those are public housing programs. Those programs are combined in this 400-1 budget. And then there is a budget if you have a state rental assistance program, the MRVP, Mass Rental Voucher Program, or the HVP program, the Alternative Housing Voucher Program. There is a separate budget that combines those two programs. There's a limited amount of housing authorities that have the Alternative Housing Voucher Program, but the majority of housing authorities do have a small Mass Rental Voucher Program. And then there's also a budget for the special needs housing. Special needs is referred to as chapter 689 or chapter 167. These properties, the housing authority owns the building, but the leases are between a vendor that operates the program in the unit and not with the housing authority. There is a lease and management contract with the housing authority. And we'll talk a little bit more about this as we go through the rest of the presentation. Okay, next slide. So the big question, right, is how much can you spend? What are the limits? What do we have? How much money do we have to operate with? So let's talk about that. Let me see. So DHCD sets limits to ensure fairness and equity among the 242 housing authorities that administer state-aided public housing programs. And so DHCD sets limits on how much they can spend. We set a limit, and it's referred to or called the allowable non-utility expense level, otherwise referred to as the annual. And the annual applies to the 401 budget, because that's what I just spoke about, that it combines the family and elderly programs, public housing programs at your housing authority. And this limit is only on your non-utility expenses, because we understand that housing authorities cannot control the utility costs. So the utility costs are taken into consideration separately. All right. So let's go to the next slide, which talks about how the annual is set. So the annual is a rate per unit, and that rate is then multiplied by the number of units, and then it is applied per month, and it can change every year based on the funding that we receive from the legislature. Our funding comes from the state legislature, governor's budget, and then that we look at that. We look at the projected changes in rental income. Is it going to go up? Is it going to go down? Are there changes being made to how it's calculated? And then we also look at utility costs at LHA, because that is the only pot of money that we get, is that subsidy allocation from the legislature. So you can go to the next slide. So this is an example of a housing authority that has 120 units. I'm sorry, I need to hold on one second. All right, so it's an example of a housing authority with 120 units, and they have 3 programs included in their 401 program. So they have all 3 public housing programs, the chapter 267 and 705. So you can see that the per unit month rate is different for each of these programs. And this is based on an analysis that's done by lots of financial folks, looking at the amount of monies that are available and what the estimated costs are to for non-utility expenses. This isn't all this is combined with your rental income, but this is what is set as how we get to the annual. So you multiply the number of units by the funding rate by 12 months. So for the Chapter 200 program, it comes out to $65,210, $211 a year. For the 667, you take the 100 units, multiply it times the rate, the 298.81, and then times 12 months, and it comes out to the 358,566. And you do the same thing for the 705 program, okay? So the annual for the 401 consolidated budget in this example is $495,140. So the housing authority should budget to spend this amount on total utility expenses for their fiscal year. So your bottom line non-utility expense line would be this amount, this $495,140. Okay, and you should budget right to that amount. Don't budget under it, don't budget over it, because your budget will get reverted back to you for correction. Okay. Right. So the state rental voucher program is not, there is not an annual for this program. The annual only applies to that public housing consolidated budget. So the housing authority earns a fee of $50 per unit per month for any of your MRVP or your HVP units. So again, for you, if this housing authority has 40 units of MRVP, it's multiplied times the $50 times the 12 months for an annual allocation of $24,000 for MRVP. And for the HVP, if they have 10 units, times the $50 per unit per month, times the 12 months, they get $6,000. So this budget combines MRVP and AHVP. It's called the Rental Assistance Voucher Budget. And so that budget would be budgeted at $30,000 would be your total expenses. You don't pay utilities in the MRVP or AHVP program because it's with private landlords. So this is your bottom line on your rental assistance budget, and you have to operate within this amount of money. Any costs that are allocated to this program have to equal that 30,000 or less. And anything that if anything that is not spent at the end of the year goes into an operating reserve. And again, we're going to talk about that a little bit later too. So I think the next slide is about the 689 and 167 program. So this is the program I referred to that the Housing Authority owns the building, and it leases through a lease and management contract to a vendor, and the vendor is a vendor that receives its funding from the Department of Mental Health or the Department of Developmental Services. And the leases of the residents in those buildings are with that vendor. So the Housing Authority doesn't have to take any action against any of those folks. They are clients of those agencies. So how the budget gets set for these programs is that the rent is negotiated between the vendor and the Housing Authority. We do give guidance that the minimum rent currently this year is $254 per unit. And it's actually by bed. So most of these properties are, they have 8 beds in them. Some might have 10, some might have 6, but it goes back to whatever the original CFA was. And most of them were 8. So you would negotiate that rent for those 8 beds. Then it would get multiplied out just like the 254 times the number of beds times the months. And I think actually the next slide does show that. Yeah, we did put it in. Okay. So this program though these budgets cannot be consolidated. So you would have a separate budget for a 689 program, and you'd have a separate budget for a 167 program for those housing authorities that have that. If you have multiple 689s, you would have a separate budget for those. So, if you had typically the numbers are 689-1, 689-2, you'd have a budget for 689-1 and a budget for 689-2. Okay. We can go to the next slide. Okay, so this is, how does the process begin for setting a budget at the Housing Authority? And we can move to the next slide. So typically what happens, your Housing Authority executive director and staff are following, and the fee accountant are following money all year long. They're looking at money constantly. But now it's the beginning, it's coming the time for the beginning of your fiscal year. The DHCD issues budget guidelines that set the parameters for what that annual amount is going to go up by for the year, a percentage amount. And it varies from year to year. We've had years that it didn't go up by anything, it was 0. We've had years that it went up by 10%. Typically it goes up by about 4%. But those budget guidelines come out, they talk about that. You saw them earlier. They also set the cap on the administrative line item salaries. The administrative line can only go up by a certain percentage. This year it's 4%. And that does not include the executive director's salary. The executive director's salary is handled completely differently. There are separate guidelines for the executive director's salary, and there is a salary schedule, which sets a maximum of what the salary can be for the executive director. And if your director is at the maximum, they do not get a percentage increase until we change that schedule. So the executive director will review the prior year spending You also you probably have been doing that because you're looking at those quarterlies or you're looking at those monthly budgets to actuals. The ED will discuss with the administrative and the maintenance staff, what do they see as the needs of the housing authority? Is there any kind of equipment replacement that needs to be made? Is there something that, we need to change a process for something, and is that going to require some other change at the housing authority? Are we seeing costs go up for legal costs? Are we seeing, trying to think what else we could see. Materials and supplies are costing more, maintenance materials and supplies. So those are the things that they will look at, and they can either meet with the LTO now and get input, or they can meet later. And again, it really is whatever the relationship is with the LTO. Many LTOs would like to give their input up front. Many do not. Many would rather see the budget once the proposed budget is done and talk about it at that point and understand it at that point. So it really is a negotiated point. The point that is not negotiated is that if there is an LTO, they need to see the budget at some point and be able to have some comment. Then you would discuss the needs with the board. And, this may not be the exact path, but these are the key points. So, if you're a board that, it's budget time and you've got concerns, or you think that there's something that the housing authority needs to move money from, to, or around, you should be pointing that out to your executive director. And then the executive director and the fee accountant will meet once all this input is taken, and they'll begin to prepare the budget. The fee accountant also, some fee accountants, they do come and speak to you about the year-end statements. And some fee accountants do come and speak about the budget going forward. It really is the executive director's job to present the upcoming budget to you and discuss it with you. But nothing's set in stone. If there's a problem, you have the right to ask, or if there's a question you always have the right to ask. Okay, so they would prepare the budget, and let's go to that now, the next slide. So this is the actual presentation of the budget. So the budget consists of two components. There's the income and there's the expenses. So we'll look at income first and how income is generated. So the greatest source of income is residents' rent. And rent makes up about 75% of what it costs to operate public housing. There's also money, some housing authorities receive money from projects like rooftop antennas, coin-operated laundry, and other sources or interest income from the rooftop antennas, the cell tower type things, those were really and continue to be, popular. So there is income that comes in from that. And then of course the laundry, some housing authorities have gotten away from the laundry. Many still do it, but it is a source of initial source of income, and then any interest on any of the investment income that you have invested. So actually, I just wanted to say that if rents and other income sources don't cover the DHCD approved expenses, for the LHA, an operating subsidy will be provided to make up the difference. And that's money that's made available through the state appropriation funds that I spoke about earlier. And we'll look at how the subsidy calculation and the amount of subsidy is arrived at later in the presentation. Okay, now you can go, Sarah, sorry. All right, so now to look at the expenses. Expenses fall into two main categories. Utility costs, gas, electric, water, heating oil, whatever the heating source is, and As I said before, we don't cap that, but that is part of your expenses. The non-utility costs, which again are capped by your annual, include things like salaries and benefits, maintenance, legal services, fee accountant cost, administrative cost, office supplies, equipment, phone, internet, postage, advertising. It's a wide gamut of things. Insurance, contracts, local tenant organizations. There's a budget amount for local tenant organizations, and travel and related expenses. This is not everything, but this gives you a flavor of the types of things that are there. And this, again, is all spelled out in the budget guidelines what each of these accounts entails. Can we go to the next slide? Because I don't know. Yeah, okay. So, and I'm sorry if I'm repeating myself, but it's difficult to keep straight on sometimes. So the annual budget guidelines, give you an overview, detailed instructions for the preparation of the operating budget. It gives you the description of each account, and included and provides program descriptions and monetary caps. It also gives you information about submitting the budget, what has to be done, when, and how. Expenses for the housing authority must be prorated across all LHA programs. So if you have state and federal programs, it has to be prorated across both state and federal programs. And typically the proration is based on the number of units. So you would take your total units and whatever the state units represent, that portion would get charged to any of the accounts. So if you're 30% state units, your total amounts would be 30% of those amounts would be charged to the state, and 70% would be charged to the to HUD. Again, these are the types of accounts. This just gives you a little bit more detail. So the executive director's salary is guided by the executive director's salary schedule. This is not a link here. You would actually have to go look this one up. But this sets the parameters for how the salary of the executive director is set. And then administrative salary account is capped every year. So for this year, it's 4%. So when the administrative salary line item is capped, it is the total line item is capped. So the housing authority could give, and this is generally the executive director's, I would say it is the executive director's call because they have the direct supervision of staff. Someone could get, a 2% increase and somebody could get a 6% increase, or everybody could get a 4% increase. It's that total line cannot exceed 4%, not individual salaries. The maintenance rates are set by the Department of Labor and Industries. And they're set by whatever the job title is. And those rates are generally published April 1st of every year. And the Housing Authority cannot pay more than those rates. The exception is if the larger housing authorities or some of the medium-sized housing authorities, the maintenance staff is unionized. And of course the salaries get negotiated, but they still are limited by the amount that the budget can support. But generally where we have unions, generally where we have unions is where we have state and federal programs. And so it's a combined salary. There is a line item for LTOs, and the LTO has to be a recognized LTO, and they are eligible to get the Housing Authority budget $6 per unit or $500 per year, whichever is greater. And if there is more than one LTO, that $500 is prorated among all of the LTOs. So it doesn't just go to one. Travel and related expenses. There's actually a lot of detail on this account. The travel is limited. It's related to job duties. There's guidelines about the amount of money that can be paid for meals. when there can be an overnight stay. I believe it has to be 40 miles away from the housing authority. And then there's mileage reimbursement of 45 cents per mile. So those are just some examples of the accounts and what is in the budget guidelines, the explanations of those accounts. And again, I think that most people rely on the executive director and financial staff or a few accountants to be able to provide this type of information to them, or rely on them because you've worked with them for a number of years or however. Okay, so can we go to the next slide? All right, these are links, and actually, can you open the Wellfleet budget number of units? There is no housing authority in Wellfleet. This is all made up.
See if this works.
Okay, so this is what the budget looks like. And you can see housing authority name goes at the top, your total number of units, the units times the total unit months, because everything is done on a per unit month basis, and then the amount that goes in. So if this were filled out, it would, your amounts from last year, your prior year approved budget amounts would show here in the first two columns after each of the accounts, and then what you're requesting this year. And then when it comes back to you, it may have modifications that DHCD made. So you can see that the top part of this budget is the revenue, the income that the housing authority takes in. And there's a lot of accounts here that don't necessarily apply to a lot of you. But it's, it's the rent that you take in. This budget is designed to be used for all programs. So if you were filling this out for the Public Housing Consolidated Program, you wouldn't have anything on the administrative fee MRVP lines. And if you were using this for the MRVP budget or the HVP budget, then you would have a fee in those lines. Everything is done electronically. I'm assuming that the housing authorities are printing out the budgets for you at the board meeting so that you can see them. But this is all entered online. It's called the Housing Applications Financial Information System, HAFIS it's referred to. The staff, the executive director or financial staff, whoever fills the budget out online, and the budget does get submitted online. Okay, so these are your revenues, and the subsidy amount is also included here because that is income to the housing authority too. And then your expenses are listed. So you have administrative salaries, compensated absences. Compensated absences is an amount that should be reflecting the vacation, sick time of the people that work at the housing authority, so that when they leave, there's money. Everybody gets vacation paid when they leave for whatever reason they leave. People get 20% of their sick leave at the time of retirement, or God forbid, at the time of death. But if they just leave to go to another job, they don't get any sick time. So that money is there as sort of a, as a savings account to pay those costs when the housing authority gets those types of bills. Your legal costs go here. This is some housing authorities have their own attorney. Some housing authorities, we have a regional attorney program where there's a pool now of regional attorneys, except for areas on, let's see, it's kind of Central Mass, and where's the other one? North Central and West Central, I guess. But at Western Mass and the North Shore and the South Shore and Cape areas now have a program where it's a pool of attorneys. And if you're a small to a medium-sized housing authority, you have access to that pool of attorneys. And we have, there's some money that is given to the housing authorities for those legal costs. We build it in, and we will pay certain amounts. There was just a new public housing notice that went out on this. I'm sure your directors are looking at it and figuring out what they have to do. There's a participation agreement that has to be signed between the housing authority and the program. And then if you don't have an attorney on staff and you're not of a size that can participate in this regional attorney program, then you have your own attorney, and you would include the cost of those fees in here, the estimated cost. There's member compensation for the Chapter 200 developments for housing authorities that only have that have Chapter 200. If you don't have Chapter 200, there is no member compensation. We talked about travel and related expense. There's accounting services. You pay your fee accountant. You pay for audit costs. You pay to have audits done. Administrative other, we spoke about that. That's your, your office costs. And then you have a total administration number. And then here's your tenant organization. This is where that $6 or that $500 goes. And then it goes into the utilities, the water, the, the electricity, gas, oil. And some housing authorities do have an energy conservation program, and there is money that is allocated to, that has to be, if you're paying a particular cost, like you have an energy program. I'm not the person to speak about this, I'm sorry. But there is a, the only thing I can think of is power options. I don't know if any of you recognize that, but your rates are set, and that amount goes in, that amount is what goes into that account. And then you have your maintenance costs. So your maintenance labor, as we spoke about that, that's your maintenance staff, their rates, and you would also budget overtime, and you'd also probably budget some seasonal help. And so that would go into their materials and supplies. That's whatever materials and supplies you need at the housing authority, and whatever inventory is kept. And anything that is kept at the housing authority should be inventoried. It should be labeled and numbered, and there should be a tie out with finance and the actual material itself. And then contract costs. These, many housing authorities have just general laborers. They don't have electricians or plumbers, and you have to call in an electrician or a plumber. And that's where that contract cost would show up, is in there. And then we move into insurance, payments in lieu of taxes. There, you all pay taxes to the city. It isn't the tax rate on your buildings, but it is an agreement that was entered into. And then employee benefits. It's your, retirement costs, health insurance costs, that type of stuff. And then if there's been any collection loss, that gets recorded here. If the rents aren't being collected and you've actually had to write off rents, people have moved out and left owing a balance, and you haven't been able to recoup it, that would show up here. If there's any interest expense or other general expenses, they would go into these categories here. And then extraordinary maintenance and equipment purchases, non-capitalized. These are the things that you will see get paid out of your operating reserves. Typically, they will be, your stoves, your refrigerators, your hot water tanks, things like that. Lawnmowers. If you, the big items could be if you need a truck, or you need, new equipment for snow removal, a large snow blower, something like that. Those costs would show up here. And then if there are any housing authority payments, if there was any payment that had to be made that doesn't fall into any of these categories up here, it would show down here. So this is your top budget page. Yeah, so these are our supporting pages to the budget. And you can see these when you receive the budget. So there are supporting pages that support the accounts that are on that front budget sheet that we looked at. and they will show you the breakdown and how those costs are being prorated against programs. They will show you what is actually being charged in each of those accounts. And you can take a look at that. We can move from there.
There we go.
Okay, so the housing authority is identified as whether it's a surplus or a deficit housing authority. And a surplus housing authority is that your income is greater than what the non-utility expense level is, the annual. So you don't receive subsidies from DHCD. And then if you are a deficit housing authority, your income is less than the annual, and so you are receiving an operating subsidy to cover those non-utility expenses. We can move from there. So how is your operating subsidy determined? And this is what determines it, is we take your rental and other LHA income, so that's the top part of the budget. We minus what the allowable non-utility expense level is, and we minus utility payments from that. And if it turns out to be a negative number, that is the operating subsidy that the housing authority is eligible to receive from DHCD. If that number is positive, you're a surplus and you will not receive any subsidy from us. But that's the formula to determine it. And that's how it's determined by your fee accountant and your executive director. We can go to the next slide. So you also have operating reserves, and your operating reserves come from any remaining money at the end of your fiscal year end. So remember I said always budget up to that dollar amount, that non-utility expense level, because if you underspend that amount, that whatever is left over goes into your operating reserve account. And those operating reserves are what pay for those extraordinary maintenance items, or deferred maintenance, or in support of capital work that needs to be done, and in some instances operating costs. But you definitely want to have an operating reserve. Your operating reserve should be at about 30% of your total operating costs. But this is an important, you need to have a savings account. Next slide. Okay, this is the budget approval, which I think most of you probably already know, but let's just go through quick. So when you're reviewing an operating budget as a board member, you should check if the budget's within the allowable non-utility expense level. As I said, you can check with your fee accountant and ED to provide an explanation that salaries meet the criteria that is outlined in the budget guideline. The executive director's salary reflects the contract, their contract, the budget guidelines, and the salary and contract guidelines that DHCD issues. And then any new exemptions claimed by the LHA must include an explanation in the budget dialog box. So those were like the fire stoppers that we talked about. We can go from here. So the steps are: the executive director prepares and submits the budget to the board for review and approval and certification. The tenants organization can comment, again, before, after, whatever. LHA submits the completed budget certification, which has been signed by the executive director and all board members, certifying to the accuracy of the budget to DHCD. All board members have to sign this. If you had a 5-0 vote, all sign. If you have a 3-2 vote, all sign. You're a board. So if it passed, it gets signed by everybody, the certification. The budget certification is required for each program budget. So you need one for the 400 budget and any other programs you have, such as 689 or MRBP. That certification is submitted to DHCD electronically. We review it, and once it's approved, then the executive director can push the button and submit the budget that you have already approved. And that begins the process at DHCD. Next. This link shows you what the budget certification form looks like. And there are questions on it about whether there are any relationships among staff people or board members and staff people at the housing authority. If there are, it has to be disclosed. It asks for the executive director's salary. It records your vote. What else is it? It states whether or not the executive director has a contract. And then there's a certification by the executive director that, what has been submitted is accurate and correct. And then there's a certification by the board that says we've reviewed our financials, reviewed the budget, and this is accurate. When this gets published, you can post on that. And we're at the end.